In September 2008, Lehman Brothers filed for bankruptcy with $639 billion in assets. It was the largest bankruptcy in American history, and it nearly brought down the entire global financial system. But here's the thing. The warning signs were there all along. Today, we're seeing some eerily similar patterns emerging. So, what can these massive financial collapses teach us about protecting ourselves right now? That's exactly what we're diving into today. Welcome back to Financial Mysteries, where we uncover the financial events that shaped our world. I'm your host, and today we're examining some of the biggest bankruptcies in history, not just to understand what went wrong, but to identify the warning signs that are flashing red in our current economy. We're going to explore 3 critical lessons from past collapses. First, the danger of excessive debt in a high-interest rate environment. Second, why transparency and corporate governance matter more than ever. And third, the warning signs we're seeing right now in 2025 that mirror these historical disasters. By the end of this video, you'll understand exactly what to watch for in today's economic landscape. Let's get started. Let's go back to 2008. So, how did it collapse almost overnight? The answer lies in 2 words: excessive leverage. Lehman Brothers was borrowing $30 for every dollar it actually owned. Think about that for a second. If you had $1 in your pocket, imagine borrowing 30 more and betting it all on a single investment. That's essentially what Lehman did with subprime mortgages. They weren't alone. The entire financial system was gorging on cheap debt, buying mortgage-backed securities that were supposedly safe but were actually ticking time bombs. When housing prices stopped rising and people started defaulting on their mortgages, the whole house of cards came crashing down. Here's the critical lesson for today. We are living in a world where interest rates have risen dramatically after years of cheap money. From 2020 to 2023, the Federal Reserve raised rates from near zero to over 5%. Companies that loaded up on debt when borrowing was cheap are now struggling to refinance at these higher rates. According to recent data, corporate debt levels are still near historic highs. Many companies took advantage of low rates during the pandemic to borrow heavily. Now, those loans are coming due, and refinancing them at current rates is crushing profit margins. This is exactly the kind of leverage trap that destroyed Lehman Brothers. The lesson? Excessive debt might look manageable when times are good and interest rates are low, but it becomes a death sentence when the economic environment shifts. Companies with strong balance sheets and low debt levels are the ones that survive these transitions. The ones over-leveraged, they become the next Lehman Brothers. But excessive leverage wasn't the only thing that brought down financial giants. Let's talk about Enron, a company that went from being worth $70 billion to bankrupt in just 24 days in 2001. Enron's collapse wasn't about too much debt in the traditional sense. It was about something far more insidious: fraud and the complete breakdown of corporate governance. Enron's executives created thousands of special-purpose entities, essentially fake companies, to hide billions of dollars in debt and inflate profits. Their accounting firm, Arthur Andersen, one of the Big 5 accounting firms at the time, either missed it or looked the other way. When the truth came out, it wasn't just Enron that collapsed. Arthur Andersen, which had been auditing companies for nearly 90 years, was destroyed. Thousands of employees lost their jobs and their retirement savings, which had been heavily invested in Enron stock. The fallout led to the Sarbanes-Oxley Act, which dramatically increased requirements for corporate transparency and accountability. But here's what's relevant today. We're seeing a new wave of concerns about corporate governance and transparency, particularly around ESG reporting and cryptocurrency companies. In 2022, we watched FTX, a cryptocurrency exchange valued at $32 billion, collapse in a matter of days due to misuse of customer funds and lack of proper financial controls. Sound familiar? It's Enron all over again, just with blockchain instead of energy trading. The lesson here is fundamental. Transparency and ethical leadership aren't just nice-to-haves. They're essential for long-term survival. when companies operate in the shadows, when executives prioritize personal gain over fiduciary duty, when auditors fail to ask tough questions, disaster inevitably follows. Today, investors and consumers need to demand transparency. Look for companies with strong independent boards, clear financial reporting, and leadership teams with track records of integrity. In an age where information spreads instantly, companies can't hide their problems for long. The question is whether you'll be caught holding the bag when the truth comes out. So, let's bring this into 2025. What warning signs are we seeing right now that echo these historical bankruptcies? First, bankruptcy filings are rebounding. After years of being suppressed by government stimulus and low interest rates, corporate bankruptcies are climbing again. Manufacturing is another sector showing stress. Supply chain disruptions that started during the pandemic haven't fully resolved, and now companies are dealing with tariff impacts and geopolitical tensions that are squeezing margins. Companies that expanded aggressively during the boom years are now finding themselves overextended. Second, inflation remains a persistent challenge. While it's come down from its peak, it's still above the Federal Reserve's target. This creates a vicious cycle. Companies face higher costs for materials and labor, but consumers are increasingly price-sensitive, making it difficult to pass those costs along. Profit margins get squeezed, and companies with high debt loads can't service their obligations. Third, we're seeing the same kind of systemic interconnectedness that made the 2008 crisis so devastating. When Lehman Brothers fell, it nearly took down the entire financial system because everyone was connected through complex financial instruments. Today, that interconnectedness exists in different forms, through supply chains, through digital payment systems, through global trade networks. One company's bankruptcy can trigger a cascade effect. When a major retailer goes under, it doesn't just affect that company. It impacts suppliers, landlords, employees, and entire communities. We saw this with the Silicon Valley Bank collapse in 2023, which sent shockwaves through the tech startup ecosystem. The final warning sign is complacency. Just like in 2007, when many people thought housing prices would never fall, there's a dangerous assumption today that the economy will continue to muddle through. But history teaches us that financial crises don't announce themselves with sirens and flashing lights. They build slowly, beneath the surface, until suddenly everything breaks at once. So what have we learned from these bankruptcies? 3 critical lessons stand out. First, excessive leverage is a trap. When debt is cheap, it's tempting to borrow heavily, but economic conditions change. Companies and individuals with strong balance sheets and manageable debt levels are the ones that survive downturns. Second, transparency and governance matter. Fraud and mismanagement might work in the short term, but they always catch up eventually. Demand accountability from the companies you invest in and do business with. Third, pay attention to warning signs. Rising bankruptcy rates, persistent inflation, high debt levels, and systemic interconnectedness. These are all flashing red right now. That doesn't mean a crisis is imminent, but it means we need to be prepared. The bankruptcies of the past aren't just history lessons. They're blueprints for understanding the risks we face today. By learning from Lehman Brothers, Enron, and countless others, we can make smarter decisions about our own financial futures. If you found this valuable, hit that like button and subscribe for more deep dives into financial mysteries. What bankruptcy or financial collapse do you think holds the most important lessons for today? Drop your thoughts in the comments below. Until next time, stay curious and stay financially aware.